Hello, good morning. It's a rather unpleasant Tuesday the 2nd. I'm FX Blue and this is the market brief. So Sunak's been a busy boy. He's preparing a reboot of the economy with further support for those affected by the pandemic. He's still being called upon from many different directions to extend the furlough scheme. Yet that may be an overly simple solution, because with the furlough numbers fairly constant, he should be concerned about how many of the roles that are currently furloughed may actually be made redundant when the scheme support ends. That's certainly something we've seen in our market. The dilemma, therefore, is whether they should continue artificially supporting workers who have no jobs to return to, or rip off the band-aid, get a better view of the true unemployment numbers. As always, I'd welcome your views on this one. The argument, of course, is that by removing support, the government could redirect the redundant furlough funding into retraining schemes. The logic being that that would help speed up the return to work. But whether they'd actually apply adequate funding and whether that could even make a worthwhile contribution to the economic recovery, well, that's all up for debate. Drop me a comment below, please. In the market, sterling gave up most of the recent gains posted against the dollar, and we fell back to the lower end of the recent trading range. We saw a low yesterday of 136.55, and we opened this morning ever so slightly higher, around 136.90. Over in the US, Biden's stimulus package has been delayed. Some of the more radical Republicans in Congress are currently blocking progress with that one. But the sentiment is still that a deal is there to be done and can be done pretty quickly. He may need to make a few concessions to gain their support, but progress remains encouraging. That's all the battle, of course, to keep the US economy moving again. In the markets, that GameStop story hasn't gone away. The Reddit investors are still taking it to Wall Street. And the latest development is that they've diversified their focus. It's moving away from the meme stocks and into precious metal, with a move on silver, apparently. Who'd have thought? All this has helped to provide a little support for the dollar as a bit more international money flows in to help those domestic investors in their efforts to hold the position and take GME to the moon. And with a bit more dollar support, euro dollar lost ground yesterday. We saw that fall to 120.55. We kick off this morning, again, ever so slightly higher, around the 120.75 mark at the open today. Right, that's it from me. It's a bit grisly. Should have bought a brolly, really, but not to worry. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.